All right. Good morning, good afternoon, good evening, wherever you are on this beautiful planet. Welcome to the Inner Circle live pre-New York session. I'm your host for this morning's session, Benny Allen, along with my awesome partner, Mr. Ryan Carthage. And as always, we're definitely happy and grateful for each and every one of you being here with us this morning as we take a look at the technicals and the fundamentals to see what we could take advantage of in this amazing Forex market. So without further ado, let's make sure that we turn off any and all distractions, grab a pen and paper, take lots of notes, and let's make sure that we participate and engage. Let's make sure this morning, as always, that we are taking massive action, making sure that we're accepting all possible losses before entering a trade, preparing you for any outcome. Let's make sure that we center ourselves in body, mind, and spirit, ensuring a balanced approach to trading. Let's trust in our education, strategy, trading skills, and intuition. And let's imagine our trades successfully materializing. And let's make sure that we obey our trading strategy, avoiding decisions based on greed and fear. And we want to make sure that we're never looking back or stopping once our trade has commenced. If everybody is all fired up, ready to go on this Friday morning, drop me a big one in the chat. And let's get this show started. I appreciate it. Sorry for the little bit of delay this morning. Had a couple technical issues, but I think we are all good since I see all the ones coming in. Okay, let me see, make sure everybody has control over the microphones. All right, so let's jump out of this and talk about what's going on fundamentally, right? So we'll come over, take a look at the Forex Factory first. Yesterday we had ECB data, right? So the main refinancing rate, they expected to hold it at 4.5%. Got just that. Monetary policy statement. From everything that I'm reading, the estimations, right? Everybody took it as coming through as kind of dovish, saying that they're ready. To possibly make cuts in June. But I guess, but everything is remaining data dependent. In my opinion, they really didn't give as much from what they, have been talking about uh all along, right? So they held rates, um, looking for June, which we already knew that. So to me, they didn't give as much to go on, but uh we'll see what happens with the data. There's still plenty of data to come out for the Eurozone between now and June. We see what just happened in the United States. So we shall see if the data for the Eurozone follows the narrative of what we just got here in the United States. Hard to tell, but they made it clear that they're not dependent on the Fed. They're kind of charting their own path with this thing. Uh, so we'll see. We'll see how that goes. On the U.S. front, core PPI came through, kind of provided a little bit of relief coming off the CPI data. So that came in month over month right on target for the core, and then overall month over month for PPI came through below expectations. So it was 0.3% expected, came at 0.2%. So that was all forecast. And then unemployment claims, right, came through at 211 on the forecast at 216. So the economy is still rolling. So if we look here, click on the tab, ECB eyeing a June rate cut, right? Again, what we already knew. Here they have CNBC took it as gives a strong signal that rate cuts are on the way. Lagarde said that we're not going to wait for inflation to return to 2%. So let me see this here. Going to wait before we make the necessary decisions. Okay. So they're saying they're not going to wait. We'll see. We'll see about that and how that goes. But you can see how the market is reacting overall, how it's taking, right? It all comes down to sentiment. Not necessarily what I think, but the sentiment is right that those rate cuts are coming, and you see the reaction with the euro, right? So again, fundamentals driving the technicals. That's why this is important, especially from the high top down higher time frame swing perspective. Very, very important. We'll take a look at that today. let me go back here, close this out. Um, Coming into today, Friday, we've got GDP month over month for the UK. Trading Economics has British economy grows for second month, right? British economy expanded 0.1% month over month in February 2024, following an upwardly revised 0.3 rise in January. So matching market expectations. Ryan has been talking about, with a lot of the things going on globally, watch commodities, and we see here that copper rises to a 2-year high. So copper futures rose. And of course, right, we see European stocks as they were muted yesterday ahead of the ECB decision. We see the narrative, right, over and over and over again, right? Euro dollar down as a result of the ECB monetary policy statement. So stocks rebound. Okay. Japanese yen, right? Weekends past 153 per dollar. Crazy, right? So we're gonna take a look at the dollar pairs this morning. That's a big focus of mine. And then Brent rises on Middle East concerns, right? So Ryan's been on top of it. This group is awesome overall, in regards to getting a lot better with the fundamentals. And so we see Middle East over the Middle East concerns, right? With the Iran-Israel situation, and then what's going on, with Gaza and all the other million things that are going on. Hold on one second, everybody. All right, sorry about that. Got the kiddos waking up. So then we see here front page, China exports fall more than expected, right? So what's going on with that? We'll continue to keep a close eye on it. Again, fits and starts with the economy in China. Ryan, good morning, sir. How are you?
Bro, good morning. I'm doing well, man. Happy Friday. Glad to
Happy
be here.
Friday, sir. So, uh, what's going on with this yen, man?
Look, dude, I've I've heard a couple different things, and read a few different things. So, um, they put out a fresh warning, um, last night into this morning, saying, "Hey, he said that they're not looking at a specific price point, as he said before, right? So 152, 153, not necessarily the price point, but looking at the 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 volatility in the moves and the reasoning behind the volatility in the moves, or the aggressive nature of the moves. So everything is on the table. Couple things. Oh, also, um, what was I going to say? They Another analyst and former member of the BOJ stated that they anticipate the Bank of Japan raising rates by 30 basis points
Wow.
um, by the end of the year. So
Hmm.
that meaning more than just one more in October. So, and them ultimately using the interest rates to combat the weakness in the currency. Um, Also, I was reading. Well, the prime minister is in the U.S. right now,
Okay.
and he's been here for a couple of days. And a couple of folks are talking about how they don't think the Bank of Japan would intervene while he's here. And I believe he wraps up his visit today.
Okay.
Um, so they're saying that it could. They said it wouldn't necessarily look the best as the U.S. and Japan are looking to um, build partnerships in certain areas and solidify their relationship and some of their relations. So it wouldn't necessarily be a good look if the Bank of Japan intervened while he was here having these meetings with Joe Biden. Um, so they anticipate if the Bank of Japan does intervene, it'll be after he wraps up his trip. Uh, so a couple different things out there, but I think one is definitely on the horizon, especially if we continue pushing higher. And as you look at, you'll take a look at the UJ, but we could push into the 154, 155 range, um, depending on how things go today. And I think that would stir them even more, right? And really urge them to make some immediate changes. So it's going to be interesting to see. It'll be another interesting weekend. I'll be on pins and needles watching the ticker to see what transpires. But that's it from Japan. On the geopolitical piece, um, Israel anticipates Iran giving a direct attack within the next 24 to 48 hours.
Oh wow, that's soon, huh?
Yeah, yeah, that's what Israel's expectation is. So we definitely could see some of those commodities spike. You also have some of your defense stocks, um, companies that supply direct defense materials and things like that to the United States and other countries. You see those stocks rising dramatically. Um, so that's definitely something to keep our eyes on. Now I'll be watching that over the weekend as well to see what transpires. And then you have Netanyahu, um, though the ceasefire talks, those have ended. He said, "I'm going to carry on with this war with Gaza." Um, so that's going to continue to intensify, and then the Iran situation is definitely going to add more on top of that, especially um, if they do prepare for this direct attack in the next 24 to 48 hours. So it's uh it's getting interesting out here, man.
Yep, yep. And so I definitely appreciate all the updates. But hey, I can't say this is not what we were expecting coming into the year. We know there's a lot going on, that started towards the tail end of last year. So it's just seems to be escalating, man. So we'll see. Hopefully cooler heads prevail in the long run for the sake of all of us.
Yes, sir.
Yeah, so we'll continue to keep an eye on everything. I really appreciate the update. Really, really means a lot, right? When we talk about these fundamentals and what's driving the market and how we're playing these longer swings, right? So appreciate everything
One,
you do, man.
no
Hmm.
doubt, bro. No doubt. One more thing. Um, BOE representative um, made somewhat of a dovish statement as well. Basically saying the U.S. consumers are outpacing the UK and the eurozone in spending, and so it was taken, I think, more of a dovish statement, basically saying that the UK is also going to be ahead of the US when it comes to um, cuts.
Makes sense, right? Because
Yep,
at some point you've gotta because they've and that's what they mean by the U.S. consumer. They've had and it goes for the Eurozone too, right? And I get I'm kind of one of those like, okay, I believe it when I see it at this point, but I get
for sure.
the dovish tone that some of them are taking because the economies haven't soared like it has been here in the United States, and that's what they're talking about, the consumer. So at some point they have to put their eyes on growth, economic growth. And so that typically will come with rate cuts.
Yep,
So I kind of get and I get what Lagarde is saying about not waiting for it to get back to 2% to make the move because that's where their concern is right. So they start to shift their focus to economic growth. And And so I understand where both of them are coming from, both central banks are coming from. So we'll see. And we see here, right? British economy grows for a second straight month. So they're probably trying to find a way to sustain that,
Yep.
to get people spending like we have been here, in the United States. So it's all good, man. All good. So we are on top of it.
My
Hmm.
bad. One more thing.
That's okay.
Um, your major banking institutions are basically putting on road shows for individuals that are interested in investing in Japan.
Mm.
I'll send you guys this article, but basically they're looking to take advantage of the potential growth in Japan and all your major organizations, Bank of America, your J.P. Morgan, and even your funds as well. They're all looking at. They're doing weekly meetings with researchers and investors. They're doing a lot when it comes to things happening in Japan and the potential growth in Japan. So that could also kind of spur buying of the yen from a business
Got it.
standpoint.
Got it. All right. Yeah, that's a good angle on that, man. So yeah, you're on top. Where'd you read that? Was that Bloomberg? You're gonna share it. You said
I'll
you're gonna
send
share
it to
it,
you. It's actually
right?
Japan
Okay.
Times.
Oh,
Bloomberg
Japan
probably has
Times.
something on it, but I saw it in Japan Times. I'll drop it
Okay.
into the chat here, but I'll also drop it into the community. And I'll try to find another link to it as well that might be more accessible.
Okay. Appreciate it. All right. All right. So you heard it here, everybody. What's going on fundamentally? Any questions regarding anything that we covered? No? All right, so we see the dollar held. Uh-huh. So we can see that the dollar held near 5-month highs above 105 on Friday and was set to gain about 1% for the week as traders dialed back bets on multiple interest rate cuts from the Federal Reserve this year due to strong economic data. The currency also tracked a rally in Treasury yields, with the benchmark 10-year yield jumping to 5-month highs above 4.5%. Data released on Wednesday showed that the U.S. consumer prices accelerated for a second straight month in March, defying expectations for a slowdown in price increases. All right. So producer prices, right? We talked about that, rose less last month. Markets are now priced in for 40 basis points in total easing from the Fed this year, down from about 60 basis points seen at the start of the week. The dollar rally was also fueled by further after the European Central Bank decided to hold rates steady on Thursday, but signaled readiness to cut rates soon, right? So it's all about, what the sentiment is overall. And so we go with that. So moving over to the DXY, right? Come on now. Technically, we already saw it, right? Because of the technical pattern, right? The crown that we saw signaling the possibility of, hey, you know, we've got a right tip moving along, right? So that's one of the calls of the year right there, right? From .net, spotting that crown on the daily time frame, and that push up, because look at what's happened since then, since spotting that right tip. It's moving up, right? So now we're moving into that 105, 80, 86 level, okay, and long. So that was a great signal, right? That was a great signal, right? That came through. You even had a bit of a head and shoulders right here at this level, okay? So very, very nice move to the upside is just accelerating, right? So talking about it yesterday, coming into some D extensions, right? So we'll eventually see a correction, but with the data, right? Talking about the timing, we were having a discussion yesterday. Uh, this dollar should continue to move up for quite some time, in my opinion. It'll probably break that 105.86 level. And then it'll correct and then continue continue beyond that. Ryan, what are your thoughts on that?
I'm in agreement, bro. Looking at everything that's out there and where things are right now, um, and kind of what the tone of the different central banks are, and the kind of starting to see slight separation between
Mhm.
the Fed and the ECB. I definitely agree with you. We could definitely see that 105 level and then some.
Yeah, that's what I'm thinking. So pullbacks as always, but a continuation long, right? So let's take a look at these dollar pairs. It's always good when you can get a definite direction, right? And how things are moving. Okay. And sometimes until we were saying, hey, this is going to be a hot and heavy data week, we need a catalyst to get things going. So we can have an idea of where things may want to go. We can have an idea in regards to bias, but it's always good to have that fundamental data as support, right? On the, especially when you're trading the higher time frame swings. So we can see here that from a weekly perspective, that this is moving down, right? So we put in the high, I need to add that in. Okay. Right. So you can see when you get the key data to come out, and that sentiment starts to change, right? Beginning of the year, 6 rate cuts for the US. The Fed is like, nah, maybe 3 towards the second part of the year. The markets, no, you're gonna do 6 rate cuts. And then the data starts to come out, in 2024, first quarter. Now we're moving into the second quarter, and we've got hot CPI and things like that. And so the Fed is like, we told you, possibility of 3 rate cuts. And now, right, you have some members like Raphael Bostic who said maybe one, and has been saying that for quite some time, but it's playing into that narrative, right, where you've got that dollar strength and things are moving short. Okay. So right now we are continuing to move bearish, right? So if we can get a break and close below that 64.76 for continuation, we've got a stochastic on this Aussie dollar that's in the sell zone. And so this price is moving down. Right? This is moving down. So this is bearish, right? We came right into that 61.8. So if we're looking for opportunities, right? High prices to get short. Now we haven't gotten it here on this 1 hour fib, right? It's moving down off of a 382. But this is where now I'm not taking a position on this current fib here, but this is a good example of when we talk about do you have those caveats in your trade plan to say, typically I want the sell zone 61.8 or higher. Um, but am I willing to trade a 382 move with structure? And with structure, I mean this: past resistance becoming future support, support becoming future resistance, right? So right here in this zone, okay. And that's totally up to you, um, and your trade plan, okay, and what you want to do there, right? But that was good structure, and we got to push down. If not, you stick to the rules and you let it continue, until you get the right setup to either add to a position or take an initial trade. Any questions on this Aussie dollar, right? We're looking bearish right now as a result of the recent data, dollar strength. Nope,
Oh,
no questions. All right. Moving on down, right? Take a look at this euro dollar. Okay. Rand's been talking about this crown, right, for quite some time and the possibility of it playing out. Okay. And it's in the 80-20 zone on the weekly, right? And so we got that break below that 107.24. We're clearly having a bearish week, right? No doubt about it. We've got a dovish ECB, rate cuts coming for the ECB right now. It's looking before the United States, right? So we've got this pullback and this continuation down. This should be into an extension, but um, not quite. Almost there. Just getting there to that 1.18. extension, stochastics in the sell zone, right? So that's been a beautiful U-turn within the AB boundary from the daily. And we move down through a 4 hour. And we can see here now that we've gotten an extension to be hit. That's why this is no longer highlighted. All right, so we got an A6 retracement, 1.18 extension. So now what we're waiting on, right? Our C becomes our new A, and our D, once we get a swing low to form on this 4 hour, that'll become our new B, right? So wherever we form that low, you will have a new fib setting up, and we look for another run. And the game continues. But we don't have a low yet, right? We don't have a swing low. That's very important because that's going to give us a new support. And we're just not there yet. That's running to the downside. All right. So that's a beautiful trending move there, right? And you can see here that we didn't get any pullback whatsoever. It just continued down, right? So if you were looking for an initial entry off the one, if you were looking for good confirmation, plan a 15-minute, you know, 5-minute chart, 30-minute chart, right? You didn't really get good confirmation on a correction there, right? Just impulsive as a result of the data yesterday. Okay. So coming into the D extension, so if you plan this 1 hour, okay, you're gonna get a new fib to set up on your one before your four. Okay. So again, it comes down to the time frames that you like to trade. But we're gonna look for a new AB boundary, a pullback. Okay. Pull back possibly to, structure. So once we get that low to form, right, and that D extension is hit, once we get that low to form, wherever it's going to form, then we look for a pullback, okay, and then an opportunity to get short, okay, opportunity to get short, right, because I just don't see the narrative changing when it comes to what's going on with the dollar and then the ECB. If we get to June again, at June and they decide to hold and not cut, that's different ball game, right? But based on right now, what's going on, the way the market's looking at it, we can see by the price action is shorting the euro. Okay. Questions on the euro USD? Bearish, waiting for a good setup.
No, sir.
All right, that's the euro USD. Moving on to the pound. I actually I think I cleared this chart last night. Yeah, so we're gonna redo it, right? We're gonna redo it. So we'll go up to the monthly chart, right? And we can see, right, that on this weekly, right, we're definitely having a bearish week. We totally understand that. Ryan tipped us off, right? And what one of the BOE members said, dovish, bit dovish. Okay. So let's mark this chart up. Okay, how about that? All right. So we'll mark it from the top down. Okay, monthly time frame. Okay, we're going to mark our extreme high. Okay, and going to mark our low. And we're going to put our support and resistance levels in. But before I run that, let's run this fib. All right, 238. Okay, just wanted to see where we are. And we've got resistance. Got our support. And we are going to come in, use black. There. Support. Set low. Now we'll go to the weekly chart. Again, working within the same chart. So take the lower one. So nothing really for the weekly. It's pretty spot on for the most part. This is the high. And let's link all this down to our daily chart. So we can see that, right, definitely bearish right now. Okay, definitely bearish right now. All right, so we'll come to our daily. And second, reset these. Oops, there. So we want to mark our daily levels. Okay. And again, we're just using lines, not zones. You can if you want. All right. I just find that it keeps my charts a lot cleaner this way. Realizing that, of course, support and resistance isn't just a line, but indeed a zone. Okay. Move these objects down. So, and we take these smart levels out. There. So what I want to do is I want to roll back a bit from this high and run this fib forward. Just so we can make sure we've got the right fib on this daily chart. All right, let's roll it forward. There we are. Okay. So we are moving bearish. Okay. Any questions on how we got to this point? No? Oh. All right, appreciate it. Okay, so we are indeed bearish. So we're going to take it down to the 4. Okay, so we're in between a 61.8, 786 pullback, right? So long term, right? That the extension is way down there, right? But we shall see. So moving down to the 4 hour. Let's take it all the way back just for good practice. Roll it forward. Okay. So you guys can see how this plays out. Did I miss it? There we go. All right. A long time ago. Let's roll it forward, right? Just for good practice. Here's the high. Keep it moving. Okay. Take the journey forward. There we go. All right. So went all the way back and brought it all the way forward. That's where we are. Okay. So coming in, looking at a D extension. So overall bearish. That's a beautiful pullback there. Anybody short on this pound dollar?
I am.
Awesome. Awesome. All right. Beautiful pullback there. All right. So it's a great example, right? You want to make sure didn't hit your order. Man, that's all right. That's all right. Because this was going to continue bearish. So you can see where you had from doing that top-down analysis, right? Understanding where your levels are. This is a beautiful zone to trade, right? We've got a daily resistance level that we have marked in red at 127.12. And then look at the pullback and then the move down, right? Beautiful play coming in at a D extension when it's to that 124.32, right? 124.32. So right, just let that one down. Okay. All right. And then we could just mark our 1 hour. Find a fib. So there we go. Right. All right. So just wanted to go through that for good practice, right? It's always good to go back, right, to the fundamentals. So short, right? Work your way back, move forward, right? That's how you know that you're accurate. So charts are nice and clean, right? This is the move. So click on here, click this out now, that, and that's what we're looking like across the board. All right, take these highs off, and now we know exactly where we are. Any questions on this pound dollar? Nope. All right.
No, sir.
All right. Just that simple, right? No need to overcomplicate things. Everybody can do it. Bearish. All right. So that's the pound dollar. Want to move on. NZD USD. Right. Overall, moving bearish. All right. Okay. Continuing short. Okay. Daily. Okay. Moving short. Okay. We'll look for that to continue, especially when we get below that 59.41 level. We come into our 4, and we are short. Got going on here. I need to clean this one up too. Okay. But continuing short, right? So we got a 50% pullback to structure there. Out. Okay. And we are short. Okay. Let's move down to the 1. All right. So overall, stuff. All right. So I think we're going to have the most recent fib down there at the bottom, but I just want to make sure. Okay. Just out for some of those 80-20 swings. And let's see. Yep. And, yeah. Okay. This is where we are. So bearish. Looking for any type of high prices we can get to just continue short. All right. So that's where we are. All right. Any questions on the NZD USD?
No.
All right. Okay. Moving down to the dollar CAD. All right. Continuing to move long. Continuing to move long on this one. Okay. Man, morning star a long time ago. Swinging. Okay. Continuing bullish. Look at that. All right. Let's swing off this low. See what our fib is looking like. It's been a while since I did the daily one on this UCAT. Yeah. Okay. So continuing long. Okay. And so we got some levels coming in now. So we get that these couple levels in here. Okay. There we go. So the cool thing, you know, with the deliberate practice is like, man, first thing I'm gonna do and get consistent at is can I mark my charts up right? And then I'm tracking it, you know, man, how often am I getting the direction right? Right? If you can do that, you're in business. You're in business. You can combine the fundamentals and the technicals, develop a bias, and you're going through and you're just marking up your chart. I'm not even talking about placing a trade, just marking up your charts and letting it play out and saying, like, man, well, I'm getting the direction right. Okay. We got the direction right on this. If you could do that, you could do some damage in this market, right? So that target's hit on the UCAT. That's a higher time frame 4 hour swing target. Just hit it. Okay. So congrats if you've been long on the UCAT and you took that trade, right? So that's 89. You had to stop at 89 pips for 281. We'll take it. Yep. Kiki said, yep, the direction is very important. It is. It is. And a lot of times, like besides risk management, a lot of times traders fail just they can't get the overall direction right. Okay. And so, working together in this group, we can kind of shorten the learning curve for that, working together. Okay. So the extension hit there. Taking a look at the one. All right. Uh-oh, too far forward. All right. Now we've got going on there. We got a new AB boundary pushing up to the 118, 127. Okay. So, and we've got a daily resistance level. Now we know on the DXY we're coming into some extensions. I mean, the market's pretty impulsive right now and buying a dollar, especially with those bond yields moving up. So be careful. But at the end of the day, we want to see a correction and a continuation long. Okay. All right. And you say, well, Benny, I don't know about that. Well, all I can tell you is, right, we just go off of the past, right? It just happened. Okay. It just happened. So you ride it until it fails. Any questions on the dollar CAD?
No.
All right. Uh dollar Swiss. All right. Just continuing with the long narrative, right? Especially against the Swiss. Bullish continuation, right? So again, right, we've got the direction right on it. Okay. It's just a matter of can we get into a position, right, where price hits our sweet spot. And so we haven't gotten it on the dollar Swiss since this previous fib that went. Okay. So this appears to be going right up into that 118, 127 zone. Possible 80-20. We know that the dollar will eventually correct. Okay. And then continue. So just continue to be patient, with this one, as we got a good bounce off the 236, right? And we're above that weekly level at 91.10. So we're most likely going to hit, and we might even try to push towards that 92.41. So long, just waiting for a good area to buy, right? A good opportunity to buy on this one if you're not already involved in it, right? So we've been tracking these for quite some time, right? This was an older setup. Look how that's just continued. Okay. So this was an original setup at 182 pips based on this fib sequence where it pushed deeper. So we adjusted our TP and we got just that. But then look how it's just continued on, right? So this is your technical framework combining your fundamental. So if I'm just trading, technically saying, hey, I want to get in and out, right, then you're out. But from a fundamental perspective, so think about this now, from a fundamental perspective, dollar strong, and we've been long against the Swissy for some weeks now, right? So once you start combining those two together, it may lead you to say, you know what? Maybe I take some of my position off, but I'm going to let some of this ride because fundamentally, besides fundamentally, I don't have a reason to be out of a long dollar Swiss. Everybody follow me on that? Drop me a two in the chat. This is where you really gain an edge in the market. And it's like, man, that's when you really can shoot for, higher time frame targets and things like that. Like, well, I really don't have, I'm long, right? So maybe you stay and you use new low prices to add to your position. And I know that's something that, Jeremy, like Ryan was saying yesterday, Jeremy is working on, and others in the group. They're really putting that together and building out that complete trade idea. Because this is just ever since it hit that D extension, it's continued, right? It's pulled back, but it's continued up another 225 pips. Where if you're in and out of this setup, then you're waiting on another position to another opportunity to present itself, in your sweet spot. And sometimes you don't always get it. You don't always get it. So that's the dollar Swissy. Coming in, taking a look at the dollar yen. Right. So we know we've just continued on this idea here, right? The pullback didn't play out with the last, opportunity for the 80-20 for the correction to the downside. So I actually need to clear this out because we were looking for a a uh a possibility, right, for it pushing, and I missed my target. So I don't know if anybody took it. Did anybody take that short on that correction? I missed because it didn't hit my zone there. I don't know
No,
if
I didn't
anybody did
take
on that.
that one.
Yeah, like this one didn't. I mean, it played to the downside, but I missed. Is what I'm meaning to say is that I missed it. So I'm gonna take that out, right? And then we got back long. Anybody sitting long in it in the dollar yen? Once it came down into the zone, anybody? Anybody kind of held off?
Donna, Donna says she's in it.
Okay, hold long, right? So that was the correction play there, right? So here you can see it. We're at U-turn, but it just missed, right, for the pullback. And then here, right, is where we at on the long. So it made a beautiful C to D move. So good job on that. I didn't take it because I was just so hesitant with what's going on with the BOJ, but price price just keeps riding up. And this is the new setup here on the 4, right? So I can clear this out here. I've got a clean look. Okay. So that's what we're looking for, right? So we'll continue to watch and see what happens, right? We know we're at some pretty high levels, right? We've got a D extension that's gotten hit on the daily, like it's just running. So at some point we'll see a correction. But to me, Ryan, the way it's looking, you know, it, it'll run it to the low price. I don't think with anything in regards to the rate hikes and stuff like that, it'll cause a complete directional change. I just think it's going to cause a nice deep correction if they do come in and intervene.
Yeah. On the dollar yen, I agree. I agree.
Yeah,
On the other crosses, I think we could see some those longer runs.
yeah, that's true. That's true. So We'll see. Hopefully the correction occurs and it moves it right back into the buy zone, because then I'll definitely look to buy it, because I don't see, you know, dollar weakness over the long run right now. So that's that. That's on the four brand new AB boundary, which is a beautiful thing. I love seeing those. Um, and then here, right, just continuing, right? And so this one was from a while ago there off that previous fib. So again, it's one where we've had, for the most part, on the dollar ends, the directions right on that. So that was a good pullback. 480. It continued to run. And let's see. So I think correction is definitely coming soon on the dollar yen. All right. Any questions on this pair?
No.
Nope. All right. So take a quick look at the S&P indices, and then we'll wrap things up on a Friday. All right. So
Any
there it is. Yes.
kind of observation. So we've been doing all of the USD pairs, and
Mhm.
most of them are saying it's, selling off, but then UJ is buying, but we expect a pullback. So in terms of the positioning of the UJ, when you look at the UJ there, and you also see, AUEUGU selling off, um, I guess trying to get my bearings around, the price action.
Well, they're selling off, right? But so when we go back and we look at the beginning with the DXY, right? We know that that's pushing pretty high. It's coming into resistance as we move down through the lower time frames on the DXY. We're coming into some extensions, right? So in my mind, you've got a lot of these pairs that on your lower time frames, should be shaping up, right, to make a move, right? So this one's coming into support. Okay, so this one still has a way to go. So in my mind, the way this will shake out, right, in a perfect world, is for this to come in, this price action, for example, on this Aussie dollar to come into a key support level and then create a pullback, right? Meaning, right, that dollar starts to correct a bit, because we know on the DXY, right, we're looking at the dollar index and it's pretty high. Eventually, we're going to see a correction. So what I'm thinking is that short-term correction on the dollar will cause these to correct and give us another opportunity to get involved for the short. Does that make sense?
Okay, yeah.
Right. So dollar strong, but at some point we're going to correct. Okay. On the DXY. Okay.
You just got to use your confirmation. Yeah, pretty much.
Yeah. So these are going to correct. See how that's coming into that 105.86, right? It'll slow down for a little bit. Right. See how we're coming into some levels. And so when we see the minor correction here, we'll see those other pairs of price action go like this. Okay.
Yeah. Yeah.
Like that. And then when this is ready to continue, hopefully, right, we've pushed to a new high price. Okay. And then it'll be time to get short. Okay. Because I definitely see dollar strength continuing. But of course, it gets too high. We see some relief, comes down. And so, right, where we've got these other pairs where the dollar is the counter currency. See, Euro USD is the counter currency. Okay. USD CAD is the base currency. So for something like on the USD CAD, if we see the dollar make a correction, right, as we come into these extensions, see here, right, now we're just running, we're coming to an extension. Then we may see, right, dollar corrects, it drops because the dollar is the base currency in this pair. See? And then when that dollar regains strength, then we move up. And that plays right into our Fibonacci sequence. Make sense?
Yeah, just sometimes it's hard to get the spatial time.
Mm-hmm. 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 And sometimes, like on all of these, right, you may get, based on how much it corrects, the price action may fall right in your lap into your sweet spot. And some it may force a correction to right to a 61.8786. But then in some pairs, it may only correct to, 23%, and then that may not be within your trade plan, so you don't take it. Right? So as the dollar starts to move into those extensions, the DXY, then hey, maybe we start to get that correction back down, and then eventually a continuation long, based on the fundamental narrative of the dollar staying stronger over time, right? Higher rates for longer. That would play right into that narrative, right? And that's just the ebbs and flows of the market. But we can see, right, how the S&P, we've got a lot of banks reporting starting today. I know Chase reports today, some other banks start to report earnings, I believe. So we'll see, right? This is hovering. Let's see what happens. All right. That's it. The S&P, right, is continuing to correct. See that? Same stuff, no matter what the asset class. Right? No matter how bullish it may be, at some point it's going to correct. So he said she caught that one. Great work. Great work. Great work. I like it. All right, everybody, we got to wrap this up. Appreciate you all being here with us. Ryan, anything before we close out, sir?
Benny.
Somebody had a question?
Oh.
Good morning, Benny.
Good morning.
I have a question.
Okay.
Before you wrap up, it's regarding membership, inner circle membership for new members. Is it the same $27.99 for per month for new members?
Ryan, you want to handle that one? It is.
Okay.
Can you repeat that question one more time for me, please?
Inner circle membership for new members, is it $27.99 per month for new members who wants to come in?
Yes. So that $27.99 is for access to the community, and then
Okay.
if they want to purchase the course,
Okay.
if they purchase it as they're going through purchasing the community membership, they get it at a discounted rate, and that rate is $129 for the course. If they buy the course separately, it's $179.
Okay. So
Yes, but access to the community is $129. I mean, is $27.99.
Okay. Got it. Okay. Thank you.
All right. Everybody, have a great day. We'll see you tomorrow, 7 a.m. Eastern Standard Time for the Forex.
One last question concerning the re-enrollment. I was trying to re-enroll, but the system was asking me to do a new payment. Does it automatically cancel the old one?
Yes, it does.
Oh, okay. Thank you so
The
much.
old one will automatically cancel once you re-enroll. And what we've done for current members, so you guys on the call here and any other current members that are not on the call, because we're going through this re-enrollment process, we are offering you 1 month free due to that change. So your current subscription will cancel, You'll get a month free, and after that free month, then the payments will start at that new price of $27.99 for you guys.
Wow, thank you so much, you guys. You give us a lot, and with this,
You're
thank you.
You're welcome. We're welcome. Thanks for being a member.
Thank you.
Appreciate you.
All right, everybody. Have a great day.